Hey guys, welcome back to Snowball Investing. This is going to be a bit more of a fun episode for me anyway, because my portfolio is in the green, which is highly unusual. But as always, we'll go through all of my portfolios, how they're performing. There's a lot of hype in the stock market, especially around tech stocks and more specifically AI. So we'll talk about that. But without further ado, let's jump into the stocks and shares ISA. So the value of my stocks and shares ISA sits at £51,537, and I'm up in this portfolio by £8,205, which is a stark difference from last month because I was down around £7,000. As you can see from the monthly chart, it's probably the best month I've had in the stock market ever, and that's mainly due to Palantir, which I'll talk on in a little bit. But as you can see, about a month ago, the portfolio was sitting at 34,000. And I've pretty much gained around £15,500 in a single month, which is amazing. Comparing the ISA to the FTSE All-World ETF, in the past month, the portfolio is up by 39.44%, and the FTSE All-World ETF is up by 0.65%. And looking on the maximum time horizon, the overall portfolio is up by 11.19%, where the FTSE All-World ETF is down by 4.6%. As you can see from the chart, it's not been an easy ride since I started this portfolio. At one point, it was almost down by 30%, but my strategy was just to kind of dollar cost averaging every single month into what I think are great companies, and that has seemed to pay off. However, bear in mind, there is a lot of foam in the market, especially around AI plays, so I'm not entirely expecting this performance to hold up. If it retraces back, that's even better because I get to buy great companies at even better prices. But we'll see how the market plays out in the next couple of months. The main reason for a lot of my gains is my biggest position in my ISA, which is Palantir. So this is up by a massive 47%, and the overall value of this sits at £26,883. There were a lot of catalysts that drove this price action up. The first was probably earnings. They had a pretty amazing earnings where it was the second quarter they showed GAAP profitability. And more importantly, they were profitable from operations. I think a lot of Wall Street took note of that, and that's something Wall Street wants to see, especially in a macroeconomic conditions like we're in now. And that's probably why Cathie Wood bought a lot of shares, which probably is another reason why the price shot up. The third catalyst was probably the release of their AIP platform, which is their artificial intelligence platform. If you've been paying attention to the market at all, you know anything that even mentions AI is getting a premium, and that probably has helped. And Palantir even had their AI peak on, which I thought was pretty amazing to see how companies are using the product to drive benefits and efficiencies for their businesses. So looking at the share price in the past month, it's up a massive 94.77%, which is pretty much double. Do I think it's justified? It's a difficult question. I think there were a lot of catalysts that sort of drove a lot of institutional investors to buy, which is probably why it's jumped up so much. Would I short the stock, or do I think it's going to go to the moon? I honestly have no idea how this is going to play out in the next couple of months or years. I'm not sure if this price action is sustainable. What I do know is I'm quite happy with my position. So I've been dollar cost averaging into this company for the past sort of year and a half, 2 years. I've built a sizable position. There is a lot of FOMO in the stock, and I don't like to buy stocks when there's a lot of FOMO. So for the time being, I'm just going to hold my position. If it continues to run, that's great. If it does retrace back, I'd like to buy at the $10 range. If we ever get back to $10 is another question. I'm not sure. But I'm happy to sort of wait and play this one out, because there are plenty of other opportunities in the market. Taking a look at some of these other positions, the FTSE All-World ETF is up by 3.5%. I'm building this position up, but I kind of see it as almost a cash-like position. I wouldn't hesitate to sell some of these shares if I think there are other stocks at great valuations that I want to capitalize on. Next up, we have SoFi, which sits at £2,208 and is up by 0.49%. This stock has again had a pretty amazing run up in the past month, so it's up by 48.7%. This was mainly due to the potential of the student loans part of this business to come back. This is a bit of a shame because I was actually looking to build this into a much bigger position, instead of Palantir, given the recent run up. However, it's now trading at a slightly rich valuation, so I'm potentially going to add a little bit of shares every single week. However, I won't go heavy into the stock because hopefully there is a retracement back to sort of the $4, $5, $6 range. The Nasdaq is up by 3.25%, and so is pretty much a lot of the big techs. As you can see, Meta up by 40%. This one just continues to run, and I just kind of let it. I'm not going to sell any shares of Meta. Microsoft, that's up by 24.9%, and even Alphabet now is in the green at plus 5.17%. We have Tesla, which sits at £1,131. This has had a pretty good run up in the past month. It's a shame I didn't buy more shares when the price was lower, because in the next 10 years, I think this stock's going to do very well. But again, hindsight's 2020. Financials in the market are getting beat up while tech is rallying, and that's one of the reasons why I bought PayPal. So I've been buying a bit more of this, kind of bring that cost basis down. I'm still down 29%, but it's a solid company with great growth, great free cash flow. So I'm looking to kind of build this out into a much bigger position. SL Green Realty is another stock I've been buying. So this sits now at £729 and is up 5.58%. As I said in my last video, commercial real estate is being hit really hard. I think there are a couple of gems out there, and I think that's one of them. DraftKings is still doing very well. So that's up 51.86%. My Truist position is also growing, so this now sits at a bit more sizable position of £683. Like commercial real estate and some of the other sectors, the regional banks are also being hit, and there are some opportunities out there, and I think Truist is one of them. AMD's up 29%, probably on the back of the Nvidia hype, but holding this for the long term. A few honorable mentions: Ginkgo Bioworks, again, bit of a recovery, minus 17% now. Intel also at minus 17%. Apple doing strong at plus 21%. Block minus 14%. Persimmon, that's up 1.43%. And that's another area I'm looking to kind of expand into. I think there is more pain in the later end of this year in terms of the UK house builders. If there are positions out there, I am looking to capitalize on it. I've still got a fair bit of cash left in my ISA, so I've got probably about £3,500 to spend, and every single month I'm putting in around 1,600. So there is a lot of foam in the market. The market is green, so I'm slightly hesitant to buy heavy. I'm sort of dollar cost averaging into a couple of companies, but holding a decent cash position. So if there is a lot of pullback, a lot of fear, I'm ready to sort of capitalize on that and buy heavily. The last thing to mention is Tattooed Chef, which, let's say is the worst performing stock in my portfolio. Am I going to sell it? Is it even worth it at a value of £23? I think I'm going to leave this in there as a reminder to me not to buy crappy, trashy companies based on random recommendations I get off YouTube. So, lesson learned, but again, I am a fairly novice investor, so I've got a few lessons to learn along the way. The value of my general investment account sits at £13,162 and also doing fairly well. The portfolio is up by £1,662. Comparing this portfolio to the FTSE All ETF, it's up by 8.37%, which is outperforming the ETF. And on a maximum time horizon, it's up by a 15.23%, while the FTSE All ETF is down by minus 4.6%. Looking at the positions in this portfolio, the biggest one and the biggest gainer is Meta. So they sit at £3,567 and it was up by 74%. I was buying this quite heavily when the price was pretty low in this stock and there was a lot of fear. Again, this is why I think at the moment it's a stock pickers market. You have to take opportunities where there's great companies, but the market is not understanding the long-term vision, and it's only looking at the next sort of 6 months. So I'm very happy with the performance of this stock. Like the ISA, I've got some big tech in there. So Alphabet up by 10.67%. Amazon's had a great run up. Again, this is the one I really wanted to build in a bigger position, but every time I start, it just kind of shoots up. But again, I think Amazon is valued probably the best out of all the big tech. So I am putting a bit more cash into this, but not going heavy. Microsoft, that's up by 27% and sits at £802.15. Intel is still down by minus 9.81%. Starbucks doing well, that's up by 25%. JP Morgan still holding strong at 16.8%. The ones not doing so well are the more riskier plays, which comes part and parcel of buying these. High risk, high reward, and at the minute the market's not liking these. So Oatly's down by 47% and Neo is down by minus 63%. Lastly, we have Enphase, still quite a small position, that's up 11%, and Rocket Labs USA, which is up 23.53%. So that concludes both the Freetrade portfolios. As you can expect, I'm extremely happy with the way they're performing, a lot of stuff in the green. However, my gut feeling is telling me there is going to be a bit of a pullback. We've had a great run up, but things don't go up in a linear fashion. There's going to be pullbacks. Regardless, I'm just going to dollar cost average into all these good positions over the next couple of months. And 10, 20 years down the line, when I look back, I'm going to be very grateful I did buy heavy in this downturn. So that concludes this portfolio. Let's move over to the Vanguard account. Taking a quick look at how my Vanguard account is performing. This is a general account rather than an ISA, but all of this is in the S&P 500, so it's up by a fairly decent £532. As I've mentioned in my previous video, it's a recurring payment of £200 that goes into this every single month into the S&P 500, and it's almost a set and forget account. So again, very happy with the general account of Vanguard. So that concludes the June portfolio update. It was nice to do an update for once where stuff is in the green rather than showing how much money I've potentially lost. Hopefully this lasts, but this is kind of part of investing. I'm going to show you what my performance is, whether my portfolio is down by 50%, whether it's up by 100%. I'm just here to kind of show you my journey. So hopefully that was interesting, that was fun, and stay tuned for the next month's update.